This video is part of my small account challenge. It's where I share cover calls and cash secure put option trades that are small account friendly. I recognize that many viewers don't have $500,000 in their trading account, or even $100,000 or $20,000. I suspect that many new and beginning traders might only have $10,000 or less. And if that's you, this video might be for you. Hey, before we jump into it, did you know that I host a community of option traders just like you and I over at school.com/simple option trading? It's where you can get early bird access to all of my YouTube videos before I release them. Plus, you can access my trade alerts and see my actual trades. And don't forget, you'll get access to all the traders in the open post forum where we share tips, tricks, and helpful information about stock option trading. And it's a great place for new and beginning traders to learn about trading options. Plus, I have a classroom with free classes, PDF checklists, and more, including how you can get one-on-one coaching with me so you can learn how to trade stock options so that you can generate a regular weekly income. Check it out over at school.com/simple option trading. I'll leave a link in the description down below. All right, let's get back into it. The company known as Digital Incorporated, stock symbol BTBT, together with its subsidiaries, engages in the Bitcoin and Ethereum mining businesses. Now, I like Digital Incorporated and what they're doing, so I would feel very comfortable owning shares of this company. Let's go ahead and take a look at the daily chart. You can see here on August the 8th, the price is hovering just above the support level, which I show at $2.51. Now, on the previous market day, the stock finished down, and so there was a red candle, so I was anticipating this might be a good time for me to actually sell a cash secure put. So taking advantage of this situation, I decided to sell a cash secure put with a strike price of $2.50. Now, even though I looked at the charts and I decided to sell a cash secure put with a $2.50 strike price, we still need to do one more step, and that's actually take a look to see if this trade would actually be profitable. So I went ahead and opened up my cash secure put analyzer, and let's walk through it right now. All right, so today's September the 8th, 2025, and we're talking about symbol BTBT. Now, for the expiration date, I'm using September the 12th of 2025, and I'm going to be using a strike price of $2.50, and I'm going to specify a premium payment of 7 cents per share. So now let's walk through the analysis. We can see I'm selling a cash secure put for stock symbol BTBT with a strike price of $2.50, and I'm going to specify one contract or 100 shares. Now, with an expiration date of September the 12th of 2025, that makes the length of this option contract 4 days. And because I specified a strike price of $2.50, that means I need to reserve $250 as collateral in my brokerage account in case the option gets exercised and the shares get assigned to me. Now, with a premium payment of 7 cents per share, that means I'll receive a total premium payment of $7. And that's a return of 2.8% based upon the amount of money I have reserved as my collateral. Hey, so let me throw a quick twist in here. I'm going to show you how I scale up this trade to collect twice the profit while utilizing the same risk profile as the original trade. But I'm going to step it up a little bit, and I'm actually going to sell 2 contracts instead of just the one. Let's take a look at how this changes the numbers. So I'm going to specify two options. We can see that the days to expiration stays exactly the same. The strike price stays the same. But now my collateral is doubled. Instead of the $250, now I need to reserve $500 as collateral in case the option gets exercised. Now, I'm still receiving 7 cents per share as the premium, but now for the total premium payment, I'm going to receive $14. And that's because I've got 2 option contracts, each one collecting $7 as the premium payment. So in the analyzer, you can see how I actually doubled the profit potential by specifying 2 separate contracts instead of just the one. Now, obviously, if you're trading with a small account, you're probably going to only want to sell 1 contract to minimize the amount of collateral you need to have reserved for the trade. In this case, it would be $250. But if you wanted to, you could specify 2 contracts for a total of 200 shares, keeping in mind you need to double the amount of collateral reserved for this trade. Well, I opened up my trading history for my brokerage account, and let's take a quick look at where I sold a cash secure put for stock symbol BTBT. Now, it's got a strike price of $2.50 and an expiration of September the 12th. Now, you can see that I actually sold this option on September the 8th at 8:42 a.m. Pacific time, and it was filled almost immediately that same morning. Now, I actually ended up selling 2 contracts, so that's why you see a quantity of 2 for 7 cents per share. Which means that when this option contract got filled, I received $7 per option contract, right? 7 cents per share times the 100 shares, times the 2 contracts for a total of $14. So I bet you're wondering what happens on the expiration date. Well, you don't have to wait. Let's jump forward to September the 12th and see what happens on the expiration date. So I've opened up my account history on my brokerage account, and now we can see what happens with this option on the expiration date of September the 12th. And you can see here that the put option for stock symbol BTBT with a $2.50 strike price has expired on September the 12th. Now both contracts expired, you can see here, and recall that the strike price was $2.50. The price finished up at $2.97 for the day, meaning that the market price was above my strike price, and so that the option contract is going to expire worthless. And so all the money that I received initially when I sold the option contract, that $14 as the premium payment, that money's totally free and clear. I'm under no obligation, so the money that I had reserved as my collateral to purchase the shares in case the option was exercised is released back to me, and I have no further obligation with this option contract. This was an awesome trade for my small account challenge. I executed a basic cash secure put option trade, which only required $250 be reserved as the collateral. Now in return, I received a premium payment of $7. Now I realize that's not life-changing money, but that $7, that was a 2.8% return on my investment for this 4-day option trade. Now in this video, I scaled the trade up by increasing the number of contracts from 1 to 2. So I received twice as much money, $14 instead of the $7, as the premium payment. But at the foundation, it's still a 2.8% return for this 4-day trade. I hope you enjoyed this small account challenge video. If you did, be sure to hit the like button and leave me a comment. I hope to see you in the next video.